Are we in danger of a further melt up? Could this market rally continue given what we've seen?
Well, I don't ever think it's a danger to have a melt up. I do think we're going to have better returns, better prospects in small cap and non-U.S. So those are the two markets that have not yet recovered from the 2018 highs. We're seeing U.S. large caps certainly well beyond those highs. But we've got a bit of more room, maybe another 5 to 10, 15% for U.S. small caps, U.S. mid caps, and non-U.S.
So is there a feeling, Joel, that those small caps and mid caps can really play catch up with the rest of the large cap? I only say this because we've heard so often from many experts on our air that the small cap side of things have been underperforming and that we can't really get that real broad-based rally unless those small caps really participate.
Well, we saw in the last month, I was here a month ago and we were talking about this, and they've been up 6% since that time. A couple of stocks in particular that I'm monitoring and talked about last time are up 20 to 22% last month. I think those things are coming back. And so this week may be choppy with the various news that's coming out, but we still have another 5-6 weeks before year end. I think we're going to have a Christmas rally. I think January is going to be strong, and it's going to be small caps, U.S. small caps, U.S. mid caps, non-U.S. I think it's going to lead it.
What a difference a year makes. I say that only because it was this time last year when we were talking about the Fed, Chair Jerome Powell, the interest rate trajectory that we were looking at, and then all of a sudden we got a steep sell-off.
Yeah.
It is not like that at all this time around.
No, that's right. Fourth quarter was really rough up until Christmas week, and then from Christmas to now, we've seen markets up 30 to 40%. And by the way, a lot of viewers may not recognize that of the Russell 1000 growth, it's been up 28%. About 8.5% are two companies driving that. So 8.5% are from Microsoft and from Apple. So when you remove those two stocks, I mean, the rest of the market's just okay. I mean, it's still strong, but it's really, this market's being led largely by two stocks.
All right, so let's say if those two stocks are driving things, what else needs to happen then for this rally to maintain the trajectory that it's on? I ask because there have been a lot of naysayers out there who say that the economic data, at least the soft survey-based data, has not been supportive of an economy, globally speaking, that should have markets, numerous markets, either at record highs or multi-year highs.
Well, what's interesting about this question, and we track entrepreneurial companies, public entrepreneurial companies, and most of the growth among the S&P 500 is about 20, 30 companies. Most of the growth, Russell 1000, 30, 40 companies. So this is not a market that's being driven broad base among 800, 900 companies. Most companies are just kind of plodding along. A lot of people also don't recognize we've got a lot of M&A activity. I mean, it's trillions of dollars in M&A activities. It's like $5 trillion last year and about the same this year. So a lot of the market's moving up for that. We're seeing a lot of dollars coming in. They're boosting the markets. We're seeing securities pulled out, and we're seeing layoffs in some of these companies. So there's a handful of companies that are growing, driving revenues, growing organically, hiring people. And so when you look at the market, the job growth is uneven, and we're seeing companies like that.
Just a few seconds left here.
Okay.
You deal with a lot of these entrepreneurial-based companies.
Yes. Yeah.
What does the IPO picture look like right now? Does it signal a healthy market?
Well, the IPO market's been off a little bit since, we've had Peloton, we've had WeWorks, and that's kind of driven a nail in that coffin, to a large extent for companies that don't have profits. So they may have revenues, but they don't have profits. And so there's a lot of these companies are now suspect. We've seen Uber and Lyft. Uber's down 40, 45%. We're seeing the CEO, the founder, selling off his stock. And so there's pessimism among those companies, but we still have other companies coming out. You mentioned Aramco, from Saudi Arabia coming at $1.7 trillion. I mean, clearly there's appetite for companies that have revenues and have profits.